Folks, we're live. Folks, welcome. Thursday Night Stock Charts Live. Will Joe Biden be impeached? We're going to answer that question tonight. We know everything about it. Everything. We're going to talk about the stock market. How did we do? How have we done so far this year? And the reason why I'm a little bit defensive, a little bit somewhat miffed, is that on Sunday night, which is our first Sunday Night Features Live of the year, I said I want a goal of 7,000 subscribers by the end of the year on YouTube. I lost subscribers. It went up immediately following the live stream, but I've lost subscribers ever since. And I asked a couple of people, and they said, you know what? You keep going over this yield curve chart, and you're sounding kind of bearish longer term, and it sounds kind of bearish, a little bit negative. But I'm long. I was saying I was buying stocks weeks ago, and nobody wanted to buy stocks. So we cashed out a lot of those trades today. Yeah, longer term, I'm bearish. I'm making a case for it. So if people are believing that I'm negative or too dyed-in-the-wool bearish, leave a comment. Give me feedback, because it's really disheartening to see your numbers drop after a live stream. So, and it's not the first time. So it's like, what am I doing here? So either my messaging is wrong and I got to change or something. But look at this Jody here. Hold on. I got to forget me crying like a baby. We need to acknowledge positive behavior. And we always want to reinforce positive behavior, the contrarian trader, because the lovely Jody, who is always a steadfast viewer, sometimes tardy, but always drops a nice note afterwards, always humble, always polite, lovely person to have on. She's here early. Let's acknowledge her. Bravo. Wonderful. Thank you for being here, Jody. Let's also acknowledge the esteemed Trader Isaac. That's right. Pete, hello. Good evening. Good to have you here. I tried to respond to your message. I was just checking my analytics, and I saw your message like 5 minutes ago. I just didn't have time to reply back, but thank you for the note and following up from last Sunday. All right, so yeah, really, in all seriousness, folks, leave feedback. What do you like? What don't you like? And if I can accommodate, I'll do it. But we need to stay true to our message, and we're gonna talk about that messaging again tonight, because what we did. Let me get my ugly mug off the screen here. If you go over to the homepage of the website, thecontrariantrader.com, you could see trades that we closed out. The guys who set this up, I hate the way they did this. I'm having it fixed. They don't put a dollar sign. They didn't put commas in here. But these are the gains, dollar-wise, return-wise. We closed out Amazon today. We bought it when nobody wanted this thing. Book profits there. What was our profit there? 11.41% long. We're not perma bears here. Coinbase, 43% profit on this move here. We bought it again. Nobody else wanted it. Tesla. We bought this sucker, cashed out. That was a quick turnaround trade. Tesla again, 10%. Moderna, we had an options trade. We lost a little bit of money on the options trade short, but I shorted the common and made some money there. Shorted XLE. We made 3%. This actually goes back to late December. 3% on one trade. We lost a couple of percentage points on another, but net in dollar terms, we made a lot of money. So 2023 starting off very, very strong. So what we're going to talk about tonight is A, will Joe Biden be impeached? B, why does that matter? C, we're going to talk about the economic data and CPI that came out today. D, we're going to go over the weekly charts. What comes after D? E, we're going to talk about the Fed's balance sheet. E, F, we're going to talk about some charts. And EFG, we're going to talk about the weekly charts and how we look to be closing out the trading week. How are we going to position for next week? Because here at the Contrarian Trader, we begin our positioning for next week right now, not on Monday, not tomorrow, right now. So let's do it. Okay, so let's get rid of all of this. This morning, well, first let's talk about the markets. Year to date, monthly chart, S&P 500. We're up about 3.75%, a nice move. And Bitcoin is up over 14%, a really big move here on Bitcoin. Now, stocks are speculative and Bitcoin is speculative, so speculative assets trading along with one another. I mean, take a look at the trip queues here. They are up 4.8%. They are outperforming the S&P 500, while the XLP, the consumer staples, which were leaders last week, they are down so far on the year. So what we're seeing is sector rotation. Does that last? We don't know. We're not that smart. All we do know is that we have a seasonally unfavorable period of time setting up for next week. What you're looking at here on TrendSpider, 35% discount code below. Use my link. Historical seasonality on a weekly time frame. This is this week here, generally up 68% of the times. It appears to be holding true. One trading day left to go for this week and last week. But next week is one of the worst weeks out of the year for the S&P 500. And the next 2 weeks thereafter, a bit, 50-50 at best. So be very careful. Generally, the markets begin the new year off strong. Why might that be? Well, the people that were capped out on their 401k contributions, well, they got those restarted again. So money is flowing back into the markets vis-a-vis 401k IRA contributions. Also, you had a lot of tax loss selling last quarter. What are institutions doing now? They're buying back their dogs at lower prices, and they're getting the write-off because they stayed out of the stock for 30 days or greater. So that's what I believe you're seeing right now, along with the technicals. 3,800 on the S&P 500, very strong support. That can't be denied. The Qs were very beaten up. Lots of high-quality stocks beaten up. But are stocks cheap? No. Why else might the stock market be rallying? And why might it stay in rally mode? It may stay in rally mode because you have the CPI data came out today. I expected a bit of a sell-off in the market. We did close up, but we did fade somewhat on the day. I believe that there was going to be a fade on the CPI data because you had such a move in advance of that move. The reason why I think that the market can continue to head up higher is this. Tomorrow is the beginning in earnest of earnings. Silly season is in full effect. Now, given the fact that CPI, the Consumer Price Index, has come in some, you may see companies actually beat on their very, very reduced forward-looking guidance. And that might be a bone to investors to go chasing stocks, even though they remain very, very expensive historically. So that's why I believe that equities can continue higher, but the drumbeat of recession continues to pound. Remember, we went into recession Q2 of 2022. We have never reemerged. So let's get to it. Let's talk about Biden for a moment. My take on this is, let's play this and we will chat about what I think is going on here. And for the conservatives out there that are thinking that we're winning, don't get too cocky yet.
Mr. President, okay. Classified material next to your Corvette. What were you thinking?
Let me, I'm going to get a chance to speak on all this, God willing, soon. But as I said earlier this week, people, and by the way, my Corvette's in a locked garage. Okay, so it's not like you're sitting out in the street. But at any rate, yes, as well as my Corvette. But as I said earlier this week, people know I take classified documents and classified material seriously.
Okay. So, whether you look at his press secretary, whether you look at him, you could tell that the walls are closing in. There's no doubt about it. Is this the good guys beginning to win? I don't think so. I think that what's happening is that the long knives are out for him in terms of political viability for 2024. They want him as damaged as possible. He'll say that he's not going to run for 2024. Will he be impeached? I highly doubt it. I think that they will, in all probability, move forward with a special prosecutor. I don't know whether or not Fox News' report here is valid yet. If somebody can validate it, wonderful. I just want to make sure I'm speaking the truth. I find it hard to believe that Garland would actually do the right thing and appoint a special counsel to do this investigation. So unless I have some other validation that Fox is accurate here, I'm going to say that this appears to be a possibility, and I'm not going to say it's a definite, but it's a step in the right direction. I think that this is the deep state. This is the World Economic Forum saying that Biden will not be the DNC nominee for 2024. Simple as that. So I'd like to think that the good guys are beginning to win. No, we are getting our candidates selected for us right here, right now. And Biden, I think, is out. All right, so let's talk a little bit about CPI today. CPI was still very, very high. And you may be saying, well, why did the stock market rally? Well, we're going to go into that in a moment. But the economy is slowing rapidly. Here is CPI rolling over, and it is still very high on a historical basis. But given that you have an economy that is slowing down dramatically, the expectation is that the Federal Reserve is only going to raise 1/4 of a basis point in the next meeting, which is on February the 1st. Now, that may sound like a good thing, but a 25 basis point move up is almost near to a pivot on the interest rate cycle. So we know that from past experiences that once the Federal Reserve pivots, once they pivot, that's when the yield curve begins to steepen, right? The yield curve steepens out and the stock market goes into free fall. So what is our plan moving forward at the Contrarian Trader? Before I go into what the plan is, what was our plan going into the new year? Buy stocks. We bought stocks. We did very, very well. We started cashing out today. Tomorrow, big bank earnings. Normally we trade BlackRock. Did we trade BlackRock? No. The reason is that you have a tremendous amount of apathy in this market. People got carried away in a very, very real way with not putting premium into the options. I mean, normally you would see BlackRock with a current IV percentile going into earnings of 55, 60, 65%. I mean, a lot of juice pumped into those options, and they're going into earnings of all things, a binary event, earnings with only a 27% IV percentile. Those options are cheap. I would never, ever, ever put on a premium trade, meaning an undefined risk premium trade, high probability of making profit, but you're only getting paid pennies when you need to be getting paid dollars when implied volatility is like this. So did we play BlackRock on earnings? No, there's not enough capital here. There's not enough fear in this stock for me to get involved with it. So we passed. First time in a couple of years that we passed on BlackRock earnings. So I've never seen this in the past couple of years anyway, this type of apathy, and this is just one more nail in the coffin for this market. And am I bearish? Am I short right now? No, we have a net long position on in the market. Are we as long as we were on Sunday? No. We took off a lot of profits today, a lot of profits in Amazon, in Coinbase, all that in our pocket, raise capital, and we have options expiring tomorrow, call options, which we sold. So we want them to expire worthless. 27 strike on Tesla expiring tomorrow. Then I have a ton of naked puts that expire on the 20th. So ideally, we keep a bid under this market. So all of that premium expires 100% in our profit, and we do a lot better than we would like. We're doing very, very well. It's good. It's good so far this year. Knock wood. So, but we're not losing sight of the bigger picture, folks. And the bigger picture is this. It's very easy, given the Mockingbird financial news media chattering that you need to be long equities. It's a new bull market, blah, 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 blah. Folks, we have a yield curve which is beginning to bottom out and base. It reversed, flashed a bullish reversal bar in December. This could quite possibly be the bottom of the inverted yield curve. And now we begin the process of building a base and then building the right side of a steepening of a yield curve. If the Fed pivot, that generally means a signal that equities are going to move lower. Are you positioned proper? Think about it longer term. I'm not saying to go short the market tomorrow. Again, I'm net long. However, we need to acknowledge that this is a situation that needs to get resolved in the bond market, and it's not going to get resolved, historically speaking, without a tremendous amount of pressure on equities. I don't make this up. This is history. This is what generally happens post a yield curve steepening. Equities come under a tremendous amount of pressure. That doesn't mean there can't be a continuation bear market rally in the short term. So here's the expectation of the Fed's terminal rate expectations. It's dropping off of a cliff. The economy is weakening, and the bond market is pricing it in. In green, you have the expectations for a rate hike 1/4 of a basis point. That's down dramatically. So the market can continue rallying. I would worry about the market beginning to buckle somewhat post FOMC meeting February the 1st. Watch the yield curve. Watch this closely as we do here. If this continues to move up higher, get ready. Look for your position, look for your spots to get short of the market. Now, the Fed's balance sheet is revised. Let me validate that it's revised. Sometimes they update it late. Yeah, this is right. So the Fed's balance sheet actually rose over the past week. So this could keep a bid under stocks for another week or so. But as this continues to roll off, pressure is going to remain on equities, folks. So please watch the volume on equities. We're going to talk about that in a moment. Watch the volume. Let's say hello to people here. No, never change, Jody. We like you the way you are. Absolutely. Calmaine. We'll take a look at it. I think it rallied today. If memory serves me, I think it rallied today. And it was a good rally, a reversal day. Speaking of bonds, I want to pull the trigger on buying bond and just hold through 23. Bad decision. I'm not sure what bond is. Is that a long ETF of what? Treasuries? I'm not. It depends upon the bond, really. If it's high yield, junk bonds, I don't know. Treasuries look good. Tips look good. So it really depends upon what's in that ETF. Hey, Tim, good to have you. Wheat. We'll take a look at wheat. Wheat. Okay. Let's go to the weekly charts. Folks, keep in mind, we're going to go over the weekly charts for a few minutes. And this gives us a feel for how we're going to close out the week. So that way we could strategize a little bit better. And this is really the first time I'm taking a look at these charts tonight along with you. So I'll be taking my own mental notes as we move along here. I mean, the one thing that really screams out at me is that the 10-year yield is just really falling off of a cliff. And you may be saying, that's a good thing, isn't it, Bob? Well, yeah, no. I mean, you take a look at what the Federal Reserve has done, and you would think that yields would be moving up higher, right, to fight inflation. They're not. So what that tells you is that the underlying economy is sick. It's sick, and the bond market knows it, and it's pricing it in. The TLT. Now, to Falcon on bond, we'll go over it, but if it's treasuries, treasuries look really good here. This is the TLT, 20-year bond ETF. Weekly chart looks really, really good. I like it. And if the yield curve begins to steepen, treasuries should do well. There'll be a safe haven flight to treasuries. The tip market, treasury inflation protected securities. The treasury market is telling you right now, they are not convinced that the Federal Reserve, while they may be reducing their rate of incremental hikes, they don't believe that's enough to stop inflation because they're buying tips. You got to read the tea leaves. What is the market telling us here? Okay, yeah, stocks rally today because the Federal Reserve is probably not going to be as aggressive on rate hikes. But what the bond market is saying is, whoa, 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 whoa. We have inflation here. They had better keep raising rates. If they don't, we're going to need Treasury inflation protection. And that's why tips are getting bid. The dollar, a basket case this week. Wow, what a breakdown here. One trading day left to go. But what this is allowing for, we have core positions. Our core positions are gold, gold miners, silver, silver miners, emerging markets. We were buying them when nobody wanted them. And now they're having a nice little stealth rally. Nobody's talking about them. Nobody cares. We're going to go to the charts in a moment. But it's a massive rally, and the street is not paying attention yet. So the dollar is very weak. It looks like it wants to go lower, whereas the euro is ripping up higher, along with the Japanese yen, of all currencies, ripping up higher. We've been talking about this. You need to know what your currencies are going to do. I've been saying for weeks now, the United States is no longer the only economy raising interest rates like we were this time last year. That's why the dollar is so strong. So people fight this gold move. They fight the silver move. Why? They think the dollar is going to be strong when in all reality, it's not, because now the Eurozone is raising interest rates. Even Japan is talking about raising taxes to finance their defense spending. So this is real stuff that's going on here, and it's not good for the U.S. dollar. And the decline in the U.S. dollar is inflationary. Think about it. Our imports become more expensive because we're using a weaker U.S. dollar to buy foreign goods. If you buy domestic goods, it doesn't matter. But if you buy imported goods, it matters a whole lot because those items now become more expensive. You need a Samsung refrigerator? Guess what? It's going up in dollar versus what is the soul? Korean dollars. I forgot what Korean, I don't know what the currency is, to be honest with you. But What is that currency? Drive me crazy now. I used to know it. But the weaker US dollar is fostering more inflation. And don't forget, commodities, many of the commodities that we use are priced in US dollars. If dollars go down, guess what goes up? Commodities, inflation. The VIX. Wow, what a chart here. This is a massive breakdown on the VIX. And you can see I drew this a few weeks ago. What could have been a bear flag setup is quite possibly setting up to be a bear flag setup. We're breaking down below the lower band of support. So this is why I'm saying that right now, I'm not saying go short the market. What a move lower here. I mean, wow. Down nearly 10.75% on the day. This is one of the biggest one-day moves in the VIX in a long, long time. The Dow Transport. One trading day left to go, but on the week right now, we have a breakout above the upper band of resistance. This is serious stuff. Volume. It should come in about average by tomorrow. The Dow Jones Industrial Average weekly chart. Strong move up over 1.5%. Your momentum indicators continue to rise with higher lows. RSI, stochastics, they're looking really good. Volume, horrible. That's the one thing this week that we're seeing across the board, especially in tech. Actually, no, XLK, pretty good volume. Let me retract that. Especially on the Qs, volume, very light. S&P 500 weekly chart, up 2.29%. Very close to a potential breakout. I think we're going to 4,000 on the SPX. Look at the volume, though. We'll be lucky if volume rose in on par with last week's volume. Daily view. I want to get a little bit more granular here. Strong session. Yeah, the 50-period moving average, which is now rising and acting as a rising floor and could quite possibly move above the 200-day moving average. So that's a bullish comment I'm providing. We're not perma-bears here. All we're doing is being realistic. Short-term, bullish. Longer-term, bearish. And we're not ready to go adding to shorts right now. Trip Qs. Weekly chart. Potential breakout above resistance here. But again, folks, look at this volume. Here's your moving average in red. Here's volume. Look at the gap. I just had lightning outside my window. That never happens here in New York in this time of year. Sounds like thunder, too. We have a breakout daily chart. So Q's looking good. The banks, very strong price action here. They're breaking out. Indicators looking good. Volume light. XLK technology weekly chart. Now here's where things get a little bit different. Volume, one trading day left to go. It's probably going to come in light on the week, but it's better than the other averages. Technology looking better. Let's take a quick peek at semis. All these indicators look really, really good. The semis are above their 50-period moving average on a weekly time frame for the first time. Buckle up when you hear this. For the first time since March of 2022. Do we close there? That's the big question. Volume, horrible. Let's go to a daily chart here. So a nice breakout yesterday, a pullback and a retest, follow through update today on okay volume. LEBU, of which I've been pounding the table on for a while now. Remember this cup with saucer setup. It is now breaking out. We are long of LABU, and we may just be adding more here. Let's update this. We're very close to a breakout. We're right there. Now, this is a leveraged ETF, putting you long of the gold mining stocks, the biotechs, not for the faint of heart. So please be very, very careful. But these stocks are doing very, very well. Daily view, a beautiful breakout on the day. We haven't touched the 200 period moving average in over a year. Over a year. Good volume. Biotech's looking rock solid. Staples, they are down on the year. They were a leadership group last year. They may be a leadership group this year, but probably not. Looks like a lot of sector rotation into tech, out of consumer staples, which is considered a safe haven play. Consumer discretionaries of all sectors that I'm looking to short. I want to see a rally up to 145. We'll look to short consumer discretionaries into that price level. Wow, I can't believe the rain that's coming down, thunder, lightning. Amazing. Must be global warming. Emerging markets. We don't use EDC. We use we own this, EMXC. This is one of our core positions, up over 2 3/4 on the week. Really beautiful price action here. Weaker US dollar acts as a tax cut for emerging markets. I far more prefer emerging markets over US stocks this year. Energy. Looks good. Looks like we're going to break out. We shorted energy twice. We made money on it. But now you can't short this. This wants to go up higher. Energy looking good here. Daily view. Wow. Thank God we covered. We covered right down here last time, January the 4th, right at the open. And ever since then, off to the races. Oil. This is why you need to buy energy. Oil moving up 6.25%. Now, pause here for a moment, okay? We had CPI that came out today. Why did CPI come in? It came in because food prices came down and energy prices came down. But China is reopening. What's oil doing now? It's consolidating, and it's beginning to build a base and getting ready for a possible challenge to these resistance levels. If oil closes out the week, not this week, next week, the following, whenever, if oil closes out a week above $85 per barrel, oil's going a lot higher. And what does that mean for CPI? It goes like this again. So you can't ignore oil. It's just extremely important. Daily view. Trending up higher on volume, no less. Yoga Mac, where you been? When you hear Bitcoin morning corporations like Mara, think hyperscale data center and electricity provider. Yes. MO Marathon. I have to take a look at the chart. I heard an argument about companies like Mara and how they could be bankrupted by carbon taxes. So I don't like that business per se. I think there's a lot of nefarious action going on in that carbon market. So I would just be careful. We'll take a look at MO for you. The lovely Jody Tesla Boyle. Okay. Westerlaw, SPY is lagging the DIA breakout just because the industrials XLI, XPI is also breaking out, and I think we're going higher. XPI. Yeah, yeah. No doubt about it. This is not a leveraged ETF. This is basically the same argument I made about LABU. Same deal, same chart, different volatility. So, yes, I agree. Does Kathy own Mara? I have no idea. No idea. They post it on their website every day. The competitive market is all about real estate when it comes right down to it. Okay. All right. ACLX. All right, I got to leave some time here. We have a bunch of charts to go over. Okay, let's get to it. Moving on. Let's close this out. Oil, we did. Gasoline, rising. Big move this week, folks. Up over 10.5%. Gold. This is the first potential closing high on a weekly time frame above 1900. We didn't close there today since April. So gold is just ripping. What were we doing back here? Buying. Physical. Daily view. A beautiful breakout today. On volume, no less. And the gold mining stocks, of which we're long of all of these, GDXJ. On the month so far, we are up about 12%. Nugget, we are up 25%. And these names are going higher. Silver took a pause, but it's still up, I believe. No, it's actually down. It's actually down 1.35%. But the silver miners, they are up measurably, up nearly 10%. So far this year, a very, very good year. And looking forward to the rest of the year. Let's do some chart requests, and we will take this home. IYR, that's real estate, no? Okay, so Forex, central markets, including oil and gas, even crypto, all caught a bid this week, even WWE. Yeah, well, that's a good point. Carvana, WWE. That's a very valid point. And from a contrarian perspective, that's a sign that, and I think that's what you're alluding to here with Carvana rallying. This is a company that could quite possibly file for bankruptcy, and they're rallying the stock. So what you're seeing is money rotate into junk stocks now, and that usually is a sign that, you know what, amateur money is back, and they're buying junk because it's low dollar in price, highly shorted, and it's not going to end well for them. So please don't go buying Carvana. Please, please. All right, let's get to it. Cal-Maine Foods. We did own this. We booked profits. We're at the low end of the trading range. $52 a share is pretty good support. Would I buy it here? Nah. Good day today. Here's my take. If you're going to buy this stock, you got to use a stop right below the lows of December the 29th and get out. It's very, very volatile. Egg prices are surging, but I mean, you're reaching max price on eggs. They killed a couple of million hens. They're probably regrowing a hen population. So this time next year, you need to assume that egg prices are going to be down. I don't know what the maturity age is of a hen before they can lay eggs. I'm not a rancher or a farmer. So at some point in time, the market's going to catch up with egg prices, and cow Maine, which really hasn't capitalized as well as I would have liked, is probably going to take a tumble. So if you buy it here, consider it speculative and keep a tight stop on it. It did have a breakout today, so it could move up higher. I would not use a market order, use a limit order, very wide spread between the bid and the ask. Wheat. Weekly chart. Yeah, looks like we're double bottoming out here. I don't see a huge need to go chasing this at all. It's probing a bottom. This could be bought. Tight stop right below the lows of the week of December the 5th, daily view. Daily view would have had a breakout today. Actually, yesterday. Retest of support today. Continuation move up higher. Wheat's a buy for a swing trade. Bond. PIMCO product. This could be bought. We have a breakout of a downtrend channel, weekly downtrend channel. What I'd like to know on a monthly time frame is, do we have resistance above? We do. I just overlaid it here, up here in dashed line, up at 96.28. I'd be taking profits there. I would buy here, book profits at 96.28. That's my call. MO, Marathon. Oh, that's out. No. What's Marathon? Yoga Mac. I thought it was Mo, but that's Philip Morris. Remind me what Marathon is, please. We'll go over it. TSLA. We are out of our common stock position of Tesla. We still have the options on it, though. We are short premium here. This is a daily chart. Let's begin with the weekly chart. We have resistance immediately above on Tesla. As noted by today's weak price action relative to the overall market. MRO, thank you. Daily chart. Here you can see the automated trend lines on TrendSpider are picking up resistance immediately above, right at 124.51. We have covered calls expiring tomorrow at 127. So I hope that they don't break out tomorrow. I'd like for them to expire worthless. Let's see how we close out the day. Good day. It's probably going up higher tomorrow morning. I think I'm going to be under some pressure tomorrow on those covered calls. But the good part is that we have naked puts that are offsetting the covered calls. So I don't know if Franklin's on, but we're going to have to be a little bit tactical tomorrow because Franklin's involved with this trade along with me. Fingers crossed Tesla goes to sleep tomorrow. Does nothing. But otherwise, I think it's going up. Remember, Tesla earnings on the 25th. Oil. Weekly view. I think we're bottoming out here. We have a naked put position, which is a long position on Boyle right now. I haven't added to it. I'm looking to put on a directional play, probably using a call spread. It's struggling to hold on to support. If it closes green tomorrow, we may pull the trigger on that long trade. But Boyle, I think, could be bought here. It's gotten beaten so hard. ACLX. RSLX. Outside reversal bar. A little bit of iffiness here. I mean, it's a strong stock. It broke out of this. I love this pattern. Stair step pattern. Right there. Just like you had back here. This is classic bull market patterns. Consolidate, breakout. Consolidate, breakout. Classic, perfect. The Aphrodite of charts. It's perfect. However, right now you're seeing a bit of an outside reversal bar because we had another consolidation, a breakout. What it may be doing here is doing a retest of the breakout point, which we haven't seen in the past, and look for a rally. How do we close out the day? Yeah, good day today. We may get a rally, salvaging the week. I think that this could be bought. Just use a tight stop below the lows of the week and just get out. If we begin to break out above weekly resistance, above right around 34.80, I'd add more on a closing breakout on ACLX. Otherwise, it looks good under a little bit of pressure. RSI, I will point out, is making lower lows. So, and that's a weekly chart. IYR, real estate. Nice little contrarian play. You're right up and into resistance. You're at the upper band of a downtrend channel. I cannot condone buying this right now. Talk to me once we break out above this upper band of the Keltner channel. I'm loving RSI, very strong on a weekly higher low and a breakout to higher highs. But I think this needs a pause. Next price target, if we do continue up higher, is 92.56 on IYR. Go back. Don't forget to click. Yes, please like, subscribe, please. Please, I beg of you. I want to take a look at Carvana, CVNA. Folks, do not go buying these stocks, please. I beg of you. This is not going to end well. This is all shorts covering, getting squeezed. Please do not go buying these stocks. Trading above the third standard deviation Bollinger Band. Pete, you're welcome. Cooper, what's the symbol, Sam? Mara. Mara, it's broken out, but you have resistance right at 728. Watch for a pullback and a retrace. Again, resistance immediately above here, daily chart. We did have a breakout. Watch for a retest of $6.76. We closed at $7.03. If that support level down there at $6.76 holds, you can nibble there. Watch for a breakout on Mara. MRO. This is a monthly chart. Strong monthly support immediately below. We bounced off of it this month. Weekly breakout. Folks, automated trend lines. Talk about a time saver. Take them off. Well, that's actually the zigzag. We broke out. Very strong price action here. Marathon appears to be a buy. This is a daily chart. Attempted breakout today. No dice, though. Watch for a close above 27.75. That would be a breakout on Marathon, and that would be a buy all day long. You're welcome, Jody. Mara equals Marathon? No, Mara is Mara. What do you mean by that? Oh, it's Marathon Digital. Okay, I see what you're talking about. Gotcha. Now I understand. I thought the company name was Mara. Bond. Looking good. PR. Another energy play, I believe. Looking really good. Daily chart looking good. Weekly chart. What you have here is a breakout on a weekly time frame, looking very strong. I love W formations like this. Love this. And we have a breakout. Higher low on RSI, a breakout to new higher highs. This is going up. Daily chart. Beautiful breakout today, or actually the other day, I should say. Continuation move up higher today. PR bullish, looking good. AMLX. I think tight's a good word. Pharmaceuticals are looking really, really good right now. The weekly chart looks the bomb. Looks really good. We broke out last week. We're doing a retest this week. This is a buy. This is a buy. Consult your financial your financial professional. Sell Mara before 950. Okay. All right. Let's check in with after hours price action, and then I will say goodnight. I want to take a look at the futures. Gold continues to move up higher, still above or now above 1900 the ounce, and it wants to go higher. The dollar limping off of its lows. Sorry about that noise. I hate it. Natty gas down. S&P futures flat. Not much happening there. And we'll leave it off with the NASDAQ futures. NASDAQ futures down fractionally. Not much happening here. So in closing, folks, I think that, again, I want to reiterate, before you unsubscribe to the channel, short term, we're bullish. We have been bullish. We're not as bullish as you were because the easy money's been made, to be honest with you. So we lightened up. We built up cash positions today. We're probably going to dabble to the short side. Probably going to, we had been since April of 2021, very neutral on the market, selling premium and just generating cash flow and weathering the storm of 2022. It worked. We had a great year. We went into this year back into swing trading equities. It's working, doing very, very well. Now we're going to do both. We're going to be more swing trading in 2023 because I think it's going to be a two-sided market. meaning some good up days, some good down days, good trading market. And we're just going to sell premium. Volatility is probably not going to be as high as it was in 2022, but there's still good money to be made out there. So if you're not currently a member, consider joining up. 14-day free trial offer. If you like TrendSpider, you get it for free with our silver and gold level members. If you're not currently subscribed to the channel, like, subscribe, and Jody, I got to get my glasses on here. Don't change your narrative for haters above. Oh, thank you very much, Jody. Appreciate that. No, there's no haters. I mean, everybody is very, very nice, but they unsubscribe. I think it's because they believe I'm a perma bear, and I'm not. I'm a trader. I just do what the charts tell me. That's it. And we use history, and right now, longer term, that historical picture is telling us we have great opportunities to make a lot of money this year. Unfortunately, the vast majority of it's going to be to the downside. It's going to be a bearish bet. That doesn't mean there's going to be not great long opportunities out there as well. Just need to stay patient. And, you know, if I'm bullish one week, bearish the next week, I'm a trader. That's what I do. I'm a capitalist. So thank you, Jody. Thanks so much, Rob. Awesome content. Thank you very much, Danny. Great to have you. Folks, have an awesome trading day tomorrow. Profitable trading day, I hope. Have a great weekend. Thank you for being here. My pleasure. Have a great night. Be well.